Darius, thanks for joining in. Let me first fill you in on how Asia is panning out. Even as we speak now, the Hang Seng is down 64 points. It opened in the positive, slipped 200 points, and it's now recovered from the day's lows, but very volatile start once again. What's your sense on which way markets are heading from here?
I think that the current low levels of indices in Asia and actually worldwide present a very attractive buying opportunity. I'm not saying that we are at the bottom. I'm hoping we are. What I'm saying is that if we buy at these levels within the next few, we will have made a lot of money. And the reason is that fundamentals, especially in Asia, are simply not justifying decline in equity markets. Growth of economies in the region is very strong. Earnings are doing very well. It's just contagion from the US, but I don't think that the contagion will be sustained. I think we should see a strong rebound near term.
But Dariusz, taking a look at the way Asia is panning out, I mean, there is still a lot of nervousness. Despite the fact that US had a very strong closing yesterday, why is it that the Asian markets are still edgy this morning? What's the sense you're getting? Is there a fear that there will be major pull-out of funds from the US investors who could be making loss in the mortgage subprime markets back in the US?
Well, when you look at the intraday pattern of trading in the US yesterday, it was big swings up and down, and we ended at a swing up, but who knows what the next leg will be. Maybe we open lower today. That's why Asia is still very nervous. And investors globally, when they want to cover some of their losses made in the credit markets, they're looking at markets that have advanced the most this year, which is Asia. That's why the selling here has been the heaviest yesterday. But again, I think that the situation will stabilize fairly soon.
But Darius, we talked about Macquarie, Lehman Brothers, some big firms that could potentially go bust. They're already talking about liquidation of their assets. Couldn't this snowball into a bigger problem? Wouldn't you wait and watch, gauge the situation completely before you make any fresh moves?
The situation is risky indeed, but you should consider the 3 points. Will global growth be substantially impacted by what's happening? I think it will not. The second point, is the financial sector, especially in the US, in danger, in a systemic danger because of losses that they may suffer in the subprime market? And the answer is not. Their exposure is not big enough compared to the capital. And the third point is, will demands from institutional investors for equities wither because private equity funds may not raise financing to do LBOs? Well, I think it will not wither because sovereign wealth funds, in particular from China, will step up to fill the gap. So I think that the broad trend having underpinning the rally in equities over the past few years will remain intact, and we will see further gains, not as fast as in the first half of this year, but nonetheless gains.
All right, Dariusz, that brings me to my two final questions. One is a word on the yen. It broke a very important level of 118 against the dollar. The other big worry is unwinding of risky carry trade. Do you see that happening? How much of risky carry trade is underway at the moment? What is the potential of it being unwound? And what kind of further pressure can that put on our markets as well?
Well, over the past 4 weeks, when you look at the data from the CME, half of the short yen positions against the dollar been closed. So half of the carry trade has been unwound. That's why we had such a steep appreciation of the yen. Investors simply were reducing exposure to risky assets. I think that, as is the case with equities, so will be the case with risk appetite and the yen. The risk appetite will resume, and the yen will start being sold again, and this will attract capital and fund investments in riskier assets such as emerging equities, in particular in Asia, including India.
Right. There is a final word. What are you looking at in India? Are you looking at making more investments in India in this corrective? Any sense on where indices could be seen bottoming out?
I think that India has been, because it has been an underperformer in Asia so far this year, I don't think it should fall much further. Despite the increase in the reserve ratio by the central bank, we still have very low money market rates. So I think there is a lot of upside. Our target remains 16,500 for Sensex by the end of the year.
16,500 for the end of the year. All right. All right, we'll leave it at that. Dariusz, thanks very much. Some positive comments coming in from Dariusz from CFC Seymour, and he was, of course, joining us live from a Hong Kong studio. Appreciate you joining us. Thanks indeed for being with us.